Dallas Realtor, and it is what? Monday's market update. And today we actually have a special guest that will be joining us shortly. He is one of my favorite credit guys, like my credit go tos. He's going to answer really the top 5 questions that buyers ask credit experts, and then we'll ask the top 5 questions that sellers ask. But before we jump into that, and Joe jumps on and kind of tells you a little bit about himself, I wanted to, one, talk about what the market is looking like right now. So in the Dallas Fort Worth area, I am I'm very happy to say this, that mortgage apps are up 10%, and they're up 20% year over year. They're up 10% as in like last week, but up 20% year over year. And so that's good. So that means that a lot of people who have been a little nervous to kind of jump into the market, well, a lot of people are not being nervous anymore. I love the fact that you guys are taking a chance and betting on yourself, okay? I'm telling you, if you want to create wealth as fast as possible, buy real estate. What is it? Don't wait to buy real estate. Buy real estate and wait. So if you know me, you know that I love. Oh no, hold on, let me see. Okay, good. I wanted to make sure that I'm live on at least Instagram. No, I'm not on Instagram. Live at least on LinkedIn, Facebook, and YouTube. So with that being said, if you guys have any questions, make sure you comment in the comments for anything that you would like me to ask Joe. Joe has not jumped on just yet. He's having a couple of technical difficulties, but we're going to bear with him. I wanted to go through a couple more great facts when it comes to the market right now. So give me 1 second. So, also, right now, this is a good time for business owners to jump into the market. And the reason why I say that is, I know you're probably like, what? Business owners. But when it comes to those self employed loans, I have talked to so many lenders that are saying that this is the time where optionality is really becoming a little bit more for people who don't have the traditional, W 2s, is it W 2s, W 4s, whatever. One of those. You can tell I'm a 1099 person because I don't have those. But, oh, Jake wants to say hello. Come on. Come on, Jake. Say hello. Or online. Say hello to everybody. Hello. No, no, no. Say hello. Okay. He loves he loves when I'm online. You know why? He hears me talking to you guys and all of a sudden he jumps over here. But let's stay focused because y'all know I'm ADD. Blue, green, yellow. Okay. So I wanted to also talk about that, the optionality when it comes to business owners. I do have a YouTube video that will be what will it be? It'll come out next week. It's with Tiffany. It's what is it? Lynn with Tiff. She's talking about the cost of waiting. And I think you guys will find a lot of value out of that video. So I'll make sure I post a little teaser so that you guys have a link to that YouTube video once I post it. It won't be a live, but it will be a YouTube video that will live on my channel. So make sure you do that. And if you aren't subscribed already, make sure you subscribe. Or if you haven't followed me, what are you doing? Make sure you follow because I post literally every day. Help me, Jesus. Okay, so what else did you guys need to know about this market that we're in right now in the DFW area? Also, now that we're 90 days like post tariffs, I will say this: I was a little nervous when it came to the tariffs because I thought, new construction was going to be skyrocketed. I think a lot of economists thought that. Also, a lot of realtor gurus, just like everyone in general. But we're 90 days into it, and honestly, people aren't as scared as we thought they would be. People are still spending money. People are still, betting on themselves, investing in real estate, selling real estate because life happens. People do real estate when there's life happening. So that's death, that's, divorce, that's, getting married, that's having kids, that's getting a degree and moving away. So there's so many things that like when life happens is when people do real estate. And so I've actually gotten multiple times last week people saying, okay, so how's the real estate market? Like, how are you doing, Kira? Like, I see you killing it. Like, how is it? Everyone's saying that it's good and bad. So right now We are more in a balanced market. I will say this is more of a buyer's market than it is a seller's, but that doesn't mean sellers, the opportunity is not for you. It does mean it is for you. It's just to price your house right. This is not a good time to test the market when you're a seller. Now, for buyers, I will say you do have a little bit more optionality, as in like asking for concessions, asking for some buy down help, asking for them to fix things. Now, I always tell my clients, you want it to feel like a win win situation. They want to feel like they're winning as the seller, and you need to feel like you're winning as the buyer. And I do my best to make sure that all of those that both parties do feel that way. So making sure you're realistic, and that's why it's so important to have a consultation, whether you're buying or selling, to have the right expectations, because not having the right expectations will, honestly, it'll mess you up. You'll feel like, well, why do I not get a deal? Well, because the neighborhood you're looking in, you ain't gonna get a good deal. That is like prime real estate, darling. The price is the price. But then you have these other areas that are up and coming. And guess what? You have a little bit more opportunity when it comes to those neighborhoods and those areas. And I do have a couple series going on right now. I have my game show. If you guys haven't been keeping up with me on social media, I have a game show of like seller's choice, and I'm going through helping sellers make the right decision when it comes to looking at offers from a buyer. I'm also doing something on Saturdays where it's, what it feels like to live in. And this past weekend, I did what it feels like to live in Dallas. So many people are moving to Dallas. We have 300 people moving here out a day, not a week, a day. So the traffic, the extra traffic that you guys feel, it's not just you. It's people are moving here, and so people are moving here. They're renting and they're figuring out what makes them feel home, and then they'll eventually buy. Okay, what else do I want to tell you about the market? Okay, we do have a Feds meeting this Wednesday. So we'll have some more like stats to talk about next week. But one thing I did want to talk about was jobs. So I will say this, what I have noticed when I'm talking to clients, past clients, or just my business is about relationships, just talking to friends, family, and people I've met in networking events or just in life in general. And I have seen time after time people saying that they have lost their job and it's so hard to find a job, or they feel like they anticipate that their job might be letting people go, and finding another job can be so challenging. And so what I advise you guys is, if you are kind of unsure about job stability, it is best for you to wait. I think the people who need to take advantage of this market, which are my buyers, is the people who are ready. Who are ready, they don't have to get ready. Because the people who have to get ready, you might miss the wave of this. Because right now it's a buyer's market, because right now we have over, 950,000 homes on the market nationwide. Once interest rates, even out or potentially drop a little bit, I'm telling you, any and everybody who's been on the fence, you know what they're going to do? They're going to jump into the market. And so guess what? What's going to happen then? It's going to be oversaturated. You're going to go back to the multiple offers. You're going to go back to overpaying. So right now, since, everyone's being a little cautious, you be greedy. This is when you go and look for something and find the deal. I'm telling you, that's every time I've bought, that's the times that I've bought, was when people were being cautious, I was being greedy. And when I say greedy, I'm just saying like you're taking advantage of the market of the moment. So that would be what I would say is the market of the moment. Oh, also, Zillow did just announce saying that they are not going to be advertising any homes that are off market, because there's so many people who are with Compass, also with Keller Williams, and I'm with Keller Williams, and basically they're saying that they're selling so many homes off market that they're not even hitting Zillow. And so now Zillow is saying, hey, if you're trying to basically hold out on listings, they will not show their listing to potential buyers. So that's more of like a realtor to a realtor news, not really a realtor to consumer, someone who's looking to buy or sell. But just know that You can't believe every news article or thing that you see. You need to make sure you come to a source that can help you dissect and digest what the media is actually saying, because what they're doing is they're brainwashing you to do what they want you to do, not necessarily what the market is saying do. Because I know that I've seen a couple of articles that were talking about, like, man, spring didn't spring this spring, and that's not true. um, One of our multiple Keller Williams offices, like, sold over $1 billion worth of real estate. So people are buying and selling. You might not be, but just also don't say that we did not warn you about taking advantage of the market. So just had to put that out there. Let me see where Joe is, because I don't see him on just yet. But let's see. Y'all are about to hear me call him. Hold on. And to you, I want to give a disclaimer. He is usually always on time. He did my last future homeowner brunch. He came, talked about what it looks like to have good credit to be able to buy, and I send quite a few people to him. I actually referred him someone last week, so I thought it was great for him to come on and just talk about credit things. I'm gonna give him another couple minutes, but these are gonna be the questions that we really cover. So one, I want him to talk about what credit score do buyers need to buy a home. Okay, how can people improve their credit score quickly before applying for a mortgage? I feel like I get that question often. And then, when checking your credit, does it hurt your score? And it actually doesn't. There's multiple ways you can check your credit score yourself that shouldn't affect your credit. And then, how does my debt to income ratio affect my pre-approval? I don't know if he'll be able to talk in depth of that question, but I know that that's like one of the top 5 questions when it comes to credit peeps. And then, can I buy a house with student loans or medical collections? I get that question all the time. And so I was like, I want him to be able to come on and give you guys a full breakdown of just that. So let me call him. Let's see. And also, let's talk about the top 5 questions that sellers ask. And so sellers always say, does selling my home affect my credit? No, that's, you're paying off a debt. And then, well, he'll talk a little bit more about that. And then, how soon after selling can I buy again using my credit? Actually, you can buy and sell at the same time. And I've had plenty of clients do that as well. And then, when paying off my mortgage, does it improve my credit score? It does, but closing accounts isn't always the sexiest for credits. For credit, just saying, because they don't like you to really pay off things, even though you should pay off things. And then the last question that I feel like I have a lot of sellers or buyers ask is, should I close old accounts once I sell my house? And old accounts, as in like your old mortgage account, that's going to be naturally closed out. But like old accounts, as in like credit cards that you don't use, or just accounts that you don't have any money in, I would advise you to do it. But I do think that that's something that he would have to do. Let's see. It looks like he's jumping on now. Give me 1 second as I add him. Y'all, I have I've been using a new streaming platform, and the struggle is real. Let me just say that. The struggle is real. So let me see where he at. So bear with me. I would play you music, but I don't know how to do that. You would think that I'd be better at this as much as I go live, but usually I go live and I don't stream other people, which is totally fine. I want to do more like interview styles, because you guys need to hear from people more than just me. Here you go. Let's see. Oh, there he is. Yay! Joe is here. Okay, so once his volume jumps in, I do want Joe to tell you a little bit about himself, where you can find him. Well, where they can find you, Joe, on social media platforms. And I also have all that information in the description if you're on YouTube. But if you're on the other platforms, as far as like LinkedIn, or if you're on Facebook, you will have to go to YouTube to get his information. I'll do my best to try to edit all the places to add it. But Joe, whenever you get a chance, I would love for you to introduce yourself, tell the people how they can find you and how long you've been in credit. But let's first see if um, if your phone or your computer's working. Can you hear me?
I can hear you just fine.
Excellent. Do you want to go ahead and get started?
I would love to. I wish my camera would work, but it's not allowing me to have access. So I apologize for that.
No worries. Are you on your computer and it didn't allow you to do it?
Yes, I'm on a laptop and it's not allowing me to access my camera. It says there's a unable issue to access mic or camera, which the mic is now good, but yeah, camera a little iffy here.
No worries. Well, I've already given people kind of an update on the market of the moment. And so I told them that you are my guest today and you were having a little bit of technical difficulties, and it's okay. It happens. What we can do is you can keep trying the camera, but um, I guess let's just jump into things. Tell them a little bit about you, and where they can find you on social media and how long you've been in credit, and then we'll jump into some questions.
So my name is Joe Camacho. I am a senior credit analyst over here at the Phoenix Group. I have been specializing in mortgage credit qualifications for, well, July 1st will be my 19-year anniversary. So I've been able to assist over 50,000 consumers achieve homeownership based on my assistance and the services and programs that I provide. So yeah, I know a little thing or two about credit and mortgage as well. So I you can find me. I have a Meta page, a Meta business page at Joe Camacho, Credit Repair Expert, and the Credit Expert is my handle on IG. So I'm not TikTok or I'm old. I don't have any of those things.
It's okay. Hey, as long as you do great business, how many people have you helped?
Over 50,000.
Over 50,000. So people don't care if you have a TikTok or not. They just want to make sure that they can raise their hand and say, "Hey, I'm over. I'm. What is it? 150,001. Hello." So as
No,
long as
yeah,
you do a good job, I think that that's what people care about the most. So.
absolutely, absolutely.
Yes. Well, what I was telling everyone before you jumped on was that I have a top 5 questions that buyers are asking me when it comes to credit, and a top 5 questions for sellers when it comes to credit. So I kind of will just jump into things. The first question that I get from most of my buyers is, what credit score do I need to actually buy a home? And I know, since you know a good amount things about mortgage and credit, you can kind of speak to this. But every mortgage lender is a little different. Oh, yay! You're on! Yay! It worked.
Finally, I apologize.
It's okay.
Um,
Hey, don't be upset. It's
so
okay.
So credit score wise, obviously the higher the better, right? That and a lot of mortgage companies will start with a 580 loan product. Here's what I like to tell potential buyers: the more that you're going to accommodate the bad credit, the more you're going to spend out of pocket. That's just facts.
Hmm.
Typically, with a lower credit score, you're going to have a bigger down payment and you're going to have a higher interest rate. So mortgages do go in tiers. We'll have start with the 580, then 620, 640. Obviously, I know what my clients like. Joe, how do we get to the 700? So depending where our starting point's at, that's going to be really, we need to try to figure out where we can try to hit that sweet spot. For me personally, I think the perfect credit score when purchasing a home is going to be around the 640 to 680 range.
Amen.
And that's just because you want more availability to different loan products. There might be some first time home buyer assistance or DPA down payment assistance programs that are out there, and a lot of the really good ones start about that 640 range, and that's where kind of I would say like where I want kind of set the bar at.
Yes, I love that. And so the next question would be like, how can I improve my credit quickly before I apply for a mortgage? I feel like you get that question all the time.
Always, always. One of the things I always tell everybody now: get a copy of your credit report, get familiar with your credit. A lot of times, if we have some issues, it's kind of like the out of sight, out of mind, right? And what you want to do is start looking at, well, maybe there might be some inaccuracies on my credit report. Maybe this doesn't belong to me, or maybe this bill was paid originally. They just haven't updated my report. One of the main things I tell people where they lose a lot of points and it's very, very easy to maintain is going to be your credit card utilization. That is huge. In the mortgage world, it's called proportionate balances. And what I tell people is, look, listen, get your credit card companies and start figuring out when do they report out to the reporting agencies. That's typically with your statement dates. And so an easy way to really give yourself an additional 30, 40 point boost on your mortgage score is to be able to pay 3 days before your statement date. So if you
Say
let's
that again,
say
Tim, for the people in the
so
back that
so
couldn't hear you.
so three so 3 days before your statement date, you want to be able to make that payment. So let's just use for argument's sake, let's say your statement date is the 20th of the month. Okay. That means by the 17th, what I want to do is I want to pay down my credit card. Now, where do I want to pay my credit card? So a lot of people have a misconception about this whole 30% rule. 30%, and I'm just going to throw this out there, that benefits the creditors. That's not real accurate information. Where you want to be at is somewhere between 5 to 9%. Do not pay off your credit card to zero. Do not do that. You will lose anywhere from 10 to 15 mortgage points based on the age of that account. So never ever pay down to zero. It gives a perception like it's dormant. It's really easy to pay off a credit card and then throw it in the sock drawer, right? Never touch it again. Well, the
Mhm.
problem is that if payment history touches 35% of your credit score, how are you acquiring payment history if you're not making payments on it or you're not using the card? So 5 to 9%,
5 to 9%.
3 days before your statement date. And
Mhm.
then what you're going to do next is that about 72 hours after that statement date has passed, look at your credit report. A great tool to utilize, Experian.com, Credit Karma, so that way you can see the update occur. And that's when you want to go and start initiating a conversation with your lender. So that way you can see that everything's reflecting accordingly. I get a lot of people who pay off their credit cards the week before, and then go talk to a lender and the credit card still looked maxed out. You're losing a solid 30, 40 points. And that's on the low end, guys. The older your credit card is, the more points you're going to lose with that utilization.
I
So
love
that's
that.
probably your number one tip right there to get those easy points.
And all the points matter, especially if you want to be at that 620 and up. Well, really 620, oh no, sorry, 640 to 680 is where you said that you feel like is the best sweet spot. And then of course, I think the next question would be like, well, if I check my credit myself, does that hurt my score?
That is a great question. There's a lot of great tools that are out there. If you're checking your credit score and it is with a financial institution, meaning like if you're applying with a lender, yes, that is going to be considered a hard inquiry. Now, the great thing about some of the partners that me and Ms. Ford partner with on the lending side, they can offer what they call a soft pull. So that's kind of will give you that roundabout. It will give you an exact account what it is, but they're sometimes they don't pull all three bureaus. The tools that you can use, like your Credit Karma or your Experian.com, here's the thing: you want to utilize something that the lender's going to use. And Credit Karma is a disservice to you as a consumer because it's using a Vantage Score 3.0 model. Vantage Score 3.0 is not being utilized by any mortgage company, any finance company, any credit card company. They all use Fair Isaac, the FICO. So the thing is that what you want to do is be able to utilize a tool that is going to allow you to look at a FICO credit score, but you also want to make sure that you're not, creating a hard inquiry. So most of the stuff, here's two websites that are my favorite. One, Experian.com, all day, every day. Really details that are easy on the eyes for the consumer.
Yeah.
It's
Digestible.
condensed. Yeah. It's super condensed. I want to see 7 years of the payment history. I want to be able to see things in full detail across all three bureaus. Now, here's a little trick. You upgrade to the premium. Now, yes, it's going to say $24.99. You're going to pay. No, you're not. There's a 7-day trial that comes with that. So select the premium, get the 7-day trial, open up the other two bureaus, and it's also not just going to give you the details of all three reports now, but it's going to give you the FICO 2 mortgage score absolutely free of charge. Now, let's say you're like, okay, I want to know all my mortgage scores, FICO 2, 4, and 5. Well, then you can go to myfico.com and you can spend about $40 to $50 there, and you can do a soft pull and look at all your mortgage scores there.
And them doing a
So
soft pull, sorry, go ahead.
no, you're good. No, go.
I was going to say, them doing a soft pull, does that affect their credit score? Because usually when you pull it yourself, it shouldn't affect it.
No, ma'am. It does not affect your credit score whatsoever. If you're willing to spend 40, $50 every time you want to generate a new mortgage score on myfico.com, it literally will be a soft pull every single time. So I always tell people, save your money. If you're not ready to jump both feet in at that moment, that I would definitely want to use something like Experian to kind of get a better feel, get better details. I think that with my FICO, it kind of resembles like an annual credit report. Annual credit report is very intimidating. I pulled some of these reports for clients that are over 200 pages per reporting agency. So
Wow.
imagine if you're 150, 200 pages per bureau, we're talking about, I mean, are you really going to thumb through 600 pages worth of documentation? Probably
No,
not.
I'm not.
Hence why I like that condensed version.
Yeah, I agree. And then, of course, my next question for you would be, how does debt to income ratio affect getting pre-approved? Because now that we can, pull the credit ourselves, and now we're like, okay, we like it, kind of not. Do you help with that debt to income? Kind of um, dive into that.
I absolutely do. Um, I'm not sure run of the mill credit repair monthly subscription type of program. Um, I am here to, the house, honestly, is probably the easiest thing I can get somebody, to be honest. Uh, New cars, credit cards, all that stuff. It's setting up someone for long term effects and educating them on how to continuously grow their credit is the harsh part of my job. So when I look at a credit report, what did we purchase with that credit? A lot of us, we need a vehicle and we end up buying a car that might have 18, 20, working with a young lady who's paying 26% interest on her vehicle right
On her
now. That
car?
is the, yes, that is the legal limit in the state of Texas. And I'm like, holy crap, you're literally driving a luxury vehicle, but instead you're driving a 2020 used vehicle.
Wow.
That is, oh yeah, oh yeah. She's got a four-figure car note. But the thing is you got to do what you got to do.
Yeah.
You need a vehicle for work and everyday, you know, errands and whatnot. And she has children as well. So the thing is I look at now where how can we improve your purchasing power? Well, if we're paying almost $1,300 for a car note a month, and I'm able to refinance her 26%. And obviously, we got to assess the situation, make sure we're not upside down, make sure we didn't roll negative equity into the loan. But now what I can do is get you with one of my partners within my network. And that's the great thing about working with me is that you get access to my network, and I'm going to critique where we send you in order to be able to get the best possible interest rate on the refinance.
Yeah.
Very specific banking institutions pull from very specific bureaus, and people don't know that. It's like if I walked into JP Morgan, JP Morgan Chase right now. In the South Territory, if I'm wanting to purchase an automobile through Chase, they're going to pull from Equifax. If I want to get a credit card, they're going to pull from Experian. Well, you're not going to find this information on Google because obviously Chase doesn't want you to have that information. So that's a little nugget for everybody right now. So if her high score is with TransUnion, why would I take her to Chase for the refi? I wouldn't. I would want to gear her and point her in the right direction of a bank that only pulls from the highest credit score. The best interest rate that you can get right now, I would probably with my clientele, I probably have seen about 5.5 to 5.9 on a refi. If this was 3 years ago, we'd be doing 1.9 all day, every day. But inflation has, kind of slowed things down a little bit, made things a little bit difficult. So that's the reason why we're still in at 5.5. But I'm telling you right now, if you're at 18, 20%, or even at 16%, you're getting that down to five, what do we save you?
So
Hundreds of
much.
dollars. Oh,
So much. 20%.
your house just got bigger, right? I mean, if someone came back to you, Miss Ford, and say, "Hey, if I can give you an extra $400 a month on my mortgage payment," I'm pretty sure, I don't know if you agree with this, but that's probably a different neighborhood, let alone a different house that we're shopping
Definitely a different
for.
neighborhood and a different house.
So the next thing I'm going to look at as well too is that if we have excellent credit, where can we trim the fat elsewhere? Your insurance.
Mm, yeah,
Before we buy a house, we're probably what, renting a property, renting an apartment, and that requires insurance. There's car insurance as well too. But a lot of people don't know that insurance companies are using your credit report to determine the level of risk. Guys, that's what a credit report is. It lets everybody know, are we a high risk consumer or are we a low risk consumer? So at the
correct.
end of the day, if we are repairing our credit and we were able good enough to have a refinance on our vehicle, now we can go and get a new mortgage, or excuse me, a new insurance quote on our premium. I have a couple I was originally working with. They already graduated a few months ago, and the wife was actually just received a speeding ticket in the last 3 months. Was on her record. This is a Chevy Silverado pickup and her Jeep Wrangler, and we saved them $225 a month on the car insurance.
Holy smokes, a month? That's great.
Right. So now you start thinking about, wow, if I save a couple $100 on my car note, a couple $100 on my car insurance or my renter's insurance, guys, also remember part of your mortgage payment is going to be mortgage insurance. So that's going to be factored in. So again, higher the credit score, lower premiums, and that's where you're going to be able to save a lot of that money. So now, what do we get? The average client, I think, with us, probably about $400 to $600 a month they're saving, and then that way, obviously, yes, it's great to have that disposable income now. But if we're trying to save for a house, we can now put that into our savings account. And here in the next 5, 6, 7 months, we have a few $1,000s that we didn't have before.
Exactly. And
So
you need those emergency funds, especially when you
that's
become a homeowner or just
always,
in
always
general.
got to have reserves. Always have reserves. Always, always.
Exactly.
So
And then leads me to my last question, which is, can I still buy a house if I have student loans and medical collections? And I think that this is something that, since student loans has just come out of, is it what is it, default?
deferment.
Thank you. That's what I'm looking for. And so now, so many people. I even heard on the news today, like so many people's credit score has dropped anywhere from 100 points because of that. So I would love for you to speak a little bit on that because that's what's holding some people back, nervous to purchase and the purchase plan.
I think that a lot of the misconception that happened with a lot of folks is that we were banking on the fact that we were wanting to get all of our student loans forgiven, and well, and obviously that didn't come to fruition, right? So it's been a little out of sight, out of mind. We went into a federal deferment. Congress passed the CARES Act in March of 2020, which put student loans into a federal deferment where it was zero payments due and zero interest that were accumulating. It was a great opportunity that if you had the money during COVID to pay off your student loans, I have three close friends that actually paid all their student loans off because 100% of the payment was going towards the principal.
I was
Great
one of your
opportunity.
friends. I'm the fourth friend because I paid off my student.
I love it. I didn't even know that. That's awesome.
Yeah.
And major weight, right, off the shoulders. It's awesome. Now, because when it came out of federal deferment in September 2023, people weren't ready for it, and a lot of people were like, "Well, wait a minute, what's going on?" So they gave an additional 1 year extension. I've been talking about this for the last year and just telling people you all need to get it ready when it comes out of deferment. So what's happening right now is that you're having late payments now that are being accrued. Now, these late payments on a federally backed student loan start at 90 days, 30, 60. Some people say, well, I'm not getting phone calls. I'm not doing that. Well, I mean, you kind of know you have student loans. So the best thing I can give advice on is that get familiar with, a lot of the changing of the guard has happened. U.S. Department of Education is now 8Vantage. We had a lot of different folks. Now there's Mohila. There's a lot of different banking institutions that have taken over, and so people don't know where to go to. Get on the phone. Studentaid.gov is going to be your best friend. that is going to be where a government website where they capture all your federally backed loans. And then that way, if you're, well, I'm not ready for a payment, great. You can dictate how the payment's going to go. So at the end of the day, that's not going to stop your purchasing power. What's going to, or your purchase process or your pre-approval process for a new home. What's going to stop you is late payments on a federally backed loan. The number one, and in my opinion, the number one loan product that most potential buyers are going to utilize is the Federal Housing Association loan, FHA.
Yep.
What is Federal Housing Association, right? Federal, guys, it's a federally backed loan. So if we're already running late payments on a federally backed student loan, kind of like the old saying, do me wrong, shame on you. Do me wrong twice, shame on me. Well, the Fed ain't going to give you any more money if you're not already paying them back the first time around. So that's going to be a situation where we can talk about getting them back on track. And if you can even do an income-based repayment plan. Maybe it's not a good year, and you can do that. But at least now it's stopping the bleeding. It's no longer past due, and you can actually go into purchasing a new home. Even with that income-based repayment plan, even if it's a zero payment. That's where the misconception is. Well, Joe, I have like $80,000 in student loans. I can't buy a house right now. Yes, you can. How that's going to affect your debt to income ratio is that Fannie Mae is going to hit you at 1% of that total debt, and then Freddie Mac's going to hit you at a half percent. They're automatically going to allocate that 1.5% against your purchasing power on that monthly basis. That's how they're going to factor that in. So if you are worried about they thinking of $80,000 or that debt is what's holding me back, you're wrong. If you're
You're
making payments
wrong.
on it,
Say it again. You're
oh yeah,
wrong.
you're wrong because that $80,000 can be. There is things as good debt. If you're making payments on it, here's what people are not understanding: mixture of credit, which is 10% of your credit score. You're not. I get it. We don't want to pay our student loans back. Totally understand. If I had 100K in student loans, I probably would not. I probably would want to avoid trying to pay them back too. Totally
Exactly.
understand. Sympathetic to the cause. However, Uncle Sam go get that money no matter what. And so what you need to do is prepare yourself what is going to work best with your budget. If you were to say, I don't feel comfortable with my payment, okay, then consolidate. Consolidation is another option where it's now I'm going to funnel all these accounts into one good account, and I'm going to pick the repayment plan that best suits me. So you do have control, but the thing is that you got to engage. You got to open that line of communication with your original finance company. So don't let student loans intimidate you. I don't care if you got 10,000. I have somebody right now in my program, $287,000 in student loans. Guess
Wow.
what? She's a first time buyer. So at the end of the day, like there's there yeah there you that's not going to stop you, and don't let it
Correct.
intimidate
Well, I love it, Joe. Do you want to go into the five? I feel like this is a lot. We might need to do a part two because we're already at 40 minutes. And I feel like people's attention span is like literally as fast as 30 seconds. I would love to have you come back on and kind of speak to the sellers. Today was really more talking to the buyers and encouraging them and kind of speaking to their needs and their questions that I get
you.
all the time. Unless you want, do you want to knock out the last five? How do you feel?
I'll follow your lead. I already feel bad that I could not, technical difficulties. I've never had that happen, but it is what it is.
It
It's
is
up to you.
okay, and I told them too. I was like, "He's having technical difficulties. He is not a late person." I said, You have spoken at my future homeowner brunch. You have been on time for that. Like, I think today was just like, technology wasn't on your side, and that's
What
okay.
it was not. It was not. But yeah, I'm always up for a part two if you want to do a second, and maybe we can have some questions if anybody's watching to see what type of questions that you guys would want answered later, down the line as well too. Get those to Ms. Ford, and I'll be more than I got a lot of information in here, so I'm more
You
than happy to
do.
share.
You are like a fountain of wisdom. And so I would love for you to come back, speak to the sellers when it comes to their credit concerns because it's like, does it mess up my credit for me to pay off my mortgage? Does it mess up my credit to close my accounts? And I just think that those are some really good things to talk about. But I do want to respect people's time, and I know, like, people will not stay that long. So we'll talk offline to figure out another time to jump on. But I appreciate you for jumping on. Tell them one more time where they can find you on social media, and then your information if they want to contact you for a consultation.
So on Instagram, you can find me at the Credit Expert. And then on Meta, I have a business page called Joe Camacho, Credit Repair Expert. I don't post a whole lot. I'm just so busy, and I'm not cool. I have a social media marketing team behind me, so when I can get to it, I can. I offer free credit reports, free credit analysis, and free consultations for anybody who's interested, just to get a better understanding. And guys, we're not here to sign up anyone and everyone. That's not our job. Our job is to find solutions in real time and to be able to get you prepared for your purchase. So if it's something where like, hey, I got good credit, but what can I do to tweak it up a little bit and maybe get the so I can get the best score? I'm more than happy to do that. I do give out free game plans as well too. I give out 20, 30 pieces of advice every day. I just don't put the advice in writing just because I'm so busy. It's not fair to take time out and type those emails out. That would take up a lot of time. But you can record me. All y'all got that a little app option on your phone now. I'm
Otter.
more than happy. I, I'm
Yeah.
more than happy to spend 5 minutes with you and give you what you need. In most cases, if you execute those instructions in 48 hours, you would see that increase in about 2 to 2.5 weeks. That's the fastest I can get it done for anybody absolutely free
Love it. Thank you so much, Joe. And we will have you
of charge. You're
on
welcome.
for next time.
Thank you. I promise I'll be better prepared.
Oh, you're fine. I'm telling you, you were fine.
Thank you so much for having me, Ms.